So I've been running heaps of these seminars, and what I wanted to do was take you through some of the questions that I've been getting. We recorded the first lot a little while ago. You'll notice the yellow shirts. Well, I've got a pink shirt on today. So we've got about 25 questions to get through. And you can watch them. They'll be separate videos, so watch them each as you go along. But guys, any questions you've got from the webinars, or any questions you've got in general, if you email them through to me, just send them through to info@ypc-group.com. And what I'll do is I'll actually record a video response, so you get the answer in video as well as putting a blog together. Because one of the fundamentals of building a property portfolio is actually getting really good education. If you can do that, then you can confidently move forward. And that's really what this is all about. This is what this education series is about. It's why I'm in front of the video so often, is because I want to get that education out there. So this question is more of a clarification question, because what I do is I talk about in my property cycle, I talk about property shoots up, sits stagnant, shoots up again. And I've been talking about property being stagnant now since March 2009. You know, we sort of had 2008 prices dropped dramatically, and then what's happened is they've been bouncing on the bottom and really haven't done a lot since. And the question and sort of expanded part of the question was, hold on Brett, you're saying the market's stagnant, but in London prices are going up. So how are you correct? Look, what I'm talking about when I talk about a stagnant marketplace, okay, I'm actually talking about the general trend. So you may find individual areas are going up, so London is actually increasing. But I was talking about London, look, I still call it a stagnant market, because really, if you look at inflation and you look at what the capital growth is, it's probably about the same. So actually, even though it might be going up in price, the inflation will take that, so actually it's pretty much stagnant. Look, if I can't remortgage constantly, then it's a stagnant market. And that's pretty much my definition of what a stagnant market is. If I can't go back to my properties and say, right, I'll have some more money out of that because I want to do something else, well then that's actually a stagnant market. If I'm in a galloping market, all right, which means that probably every 6 months, I'll go back to a property and go, right, I can take another lot out of that and I can use that for this, all right? That's a galloping market. And really, when I'm talking in general terms, the market shoots up, galloping market, sits stagnant, stagnant market, and then shoots up again, stagnant, galloping market. So that's sort of the general thing. You know, and look, you know, individual properties and individual things, because you can apply this same property cycle. And if you haven't looked at the property cycle, then go onto my website, type property trend cycle in, and you'll get the full videos and all that sort of stuff, and you can learn all about it. You know, I've done a lot of research and there's a lot of detail into that. But each individual property has its own property cycle. And what you'll find, and this is always the case, the property that you look at now and say, that is my best property and I'm so glad I bought it, give it 2 years, give it 3 years, and you'll be looking at it going, what a boring property, nothing's happening with that. And then you'll be looking at the property that you were looking at before and saying, I should sell that because it's crap, it's not going up, it's not doing anything. That's the property now that's performing. And that's why the property cycle changes with each property. And you need to be aware of this, because look, just because a property right now isn't performing in your thing, doesn't mean it won't. As long as it's got good solid fundamentals, shops, schools, transport, major employers, major investments, and as long as you're getting the rental return, and you know, as long as you've got a long-term view of things, and I'm not talking about 18 months, you know, 24 months, I'm talking about 7 to 10 years. If you take that view, then your property will produce, okay? So guys, yeah, absolutely fundamental, okay? But basically, I'm not saying when I say stagnant market, I'm not saying prices aren't going to be going up, but they're probably not going up enough for me to be taking money out, all right? And that's the fundamental. That's where I talk about, you know, stagnant market versus galloping market, all right? So guys, have a great day, and remember, live with passion.